Greetings everyone, April 20th, 2010. Joseph James, schooloftrade.com. Here's your live trading recap. Hope you guys had a good time with us in the room this morning. Relatively choppy, sloppy day we had this morning, but of course we'll take a look at that in a second. Before we talk about the trades we took today, 3 important links on that YouTube page, guys. If you're watching this video right now on the YouTube page, there are 3 important links. One's for our track record, one is for our free trial, and one, of course, is for our blog. On our blog right now, we just posted a brand new video on ATR, speed trading, dollar index trading, guys. Lots of great stuff every day on the blog, so make sure you guys follow that 3rd link. And if you're not watching this video right now on the YouTube page, just double click on it. It will take you over to the YouTube page, and that's where you can get the video links. Only one trade today, guys. It was a winner at 9.56 here on the gold, so we took a 10 ticks, $100 out of the market this morning, guys, on April 20th, 2010. Brings our weekly total here, guys, to a modest 350. As you guys saw, we took one trade yesterday, only one trade today, and really for the past 2 days, we haven't seen very much quality price action, and of course, because of that, we get fewer opportunities every day. We'll keep you guys posted, but as you can see, we're just shy of $6,000 for the month so far. Even in a pretty sluggish month, we're doing pretty well. 6K, only 4 contracts, and we're now over 30,500 for the year. So, of course, we'll keep you guys posted on that as we make our way through the rest of the month of April. What's the most important thing that happened today? Well, of course, we had Ben Bernanke speaking at 11 o'clock this morning. I think a lot of people were kind of hanging out waiting for that to be happening today. I never even heard him speak. I don't even know if he actually spoke today, but the rumor was, and of course it was on our news feed, that we had Bernanke 11 o'clock today. There wasn't much news to work with. We had a 7:45 a.m. same sales store, but obviously that didn't work. Okay, nothing applied to our 8 o'clock and later. So we didn't have much news event to work with. We opened up our charts at 7:45. We saw some low volume. We saw very sideways markets. But we saw something very interesting, and we actually touched on this yesterday in the video, but today we saw it again, which is that rising average to range. The ATR continued to rise while the price action was continuing to go sideways, which of course is called divergence, which means something in the market today was causing us to be concerned. We know to watch the dollar first as the catalyst. The dollar will tell the story as far as the catalyst goes. Remember, guys, the dollar index futures, they're going to be the catalyst to move the rest of the markets. So you watch those first. And then don't forget, watch that first move of the day. The first move of the day will usually set the tone for the rest of the morning here. All right, now, let's start first with the dollar index. Now, on the dollar, here's a broad snapshot of the past, of course, Monday and then last Friday on the dollar. And you can see here, we continue to get these sideways range in the dollar. We continue to get double tops, double bottoms, and the dollar continues to, of course, maintain this lack of conviction as far as where it wants to go. You can see it's gone up, it's come back down, it's gone back up. And so, of course, we're really at this point, we're looking for this price action to kind of get to a trend, pick a direction here, and go with it, because obviously here this sideways range not going to give us a very good job here, not going to make it very easy for us to see the rest of the markets moving very much. Now check this out. Here's what got us concerned though here on the dollar. Now around 9:30 this morning, right, here's a great example of how we can use the average to range with the dollar to begin to see market sentiment. Now on the left side of your screen, right, we've got your slower time frame dollar, right? Left side, here's your DX slow time frame. On the right side here, here's your ATR. Okay, it's a 2-minute chart of the dollar index. We call it the James range chart. Okay, so it measures ATR. Well, I want you guys to see here, and we talked about this in the room today. Notice first of all on the dollar chart where we break above this 81 even. Okay, see that? Okay, so at around I believe at that time was around 8 o'clock, 8:30. We had just now begun to break above the 81,800 level, so the big round number. Now, as we're rising, right? As we're rising, follow me over here and look what happens. As we push above, what happens on the ATR? It drops. See that? ATR drops. As the dollar breaks to the upside, ATR drops. What does that tell me? That tells me as we're looking for new price exploration, right, while we're trying to find a new price for the dollar as it breaks to the upside, the market participants are reacting to that push up by contracting in their trading range. Now let's watch what happens next. Okay, now we go, of course, back into or below the 81 even. Okay, so that here on the dollar index slower time frame. Right now we break back into the bracket below 81 even. Now down, of course, to this 8850, this sideways range here. Okay, we break down into the bracket, and then what do we see? We see the ATR rise. All right, so we break out of the bracket, ATR falls. we break back down into the bracket, ATR rises. And we called this today, what do we call it? We called that bracket on the dollar kind of the safety blanket for traders, right? Think of it this way. Look at this on the left side here. This sideways range here, right? This sideways range here. Okay, think of that as that safety blanket, right? The little kid has. They feel comfortable. It's familiar, right? It's safe, right? It's that comfort level they get when they go back down inside the bracket. Think of it this way. Every time we break out of a sideways range, it's taking some sort of pioneer, right? Some sort of buyer or seller that has no problem testing the unknown. Well, as you can see, when we tested the unknown here in the dollar this morning, breaking above 81 even, the market participants quickly responded by contracting their trading range. Then we go back down into that safe haven, right? That sideways bracket. Of course, we didn't get much up the upside, but we had to do something, right? Had to try to get up the upside. Once we broke back down, then the traders relax, and then the ATR begins to widen again. It's almost like that safe haven, right? That safety blanket being inside that sideways bracket. But what does this tell us? Okay, so you're probably saying right now, Joe, okay, I understand it, Joe. What does it tell us? It tells us that this market clearly is lacking conviction. Okay, if the market pokes its head up to the upside and quickly brings it back down in because it's too scared to see what's out there, that means the market itself, the participants in the market, of course, the dollar is the market that moves the rest of the markets. On the dollar, they are very concerned about new price, right? Finding new price direction. They don't know where it's going. And when they try to break out, we see the traders react by contracting the market. This is going to tell us to be very careful the rest of the morning here. And we saw that right away this morning. When we saw that ATR jump like that, we knew right away it told us a very important story. And again, you can see it right here. Okay, so next time you guys watch the dollar break out of sideways range, check your ATR. Then look back again when it breaks back in, what happened? That will tell you a definite story. Now, if the ATR contracted when it went back into the bracket, we'd be now looking for a big move. But it wasn't the case. The ATR widened when we went back in the bracket. That's why we're concerned.